Okay, let's get started. Good evening, everyone. Welcome again. Welcome to the webinar on the IncomeMAX strategies. I'm going to show you a PowerPoint presentation, and then after that, we'll leave plenty of questions for the Q&A section. So if you have any questions during the presentation, please feel free to type it into the question box, and I will be taking all the questions at the end of the presentation. So welcome again. Welcome to the IncomeMAX Strategies, the spreads and the straddles trading systems. My name is Swaminathan. I'm the founder of OptionTiger.com. I've been an options trader for about 8 years now. I have a bachelor's degree in engineering from India and an MBA from Columbia Business School in New York City. So the first thing we want to try to understand when it comes to options, and of course, many of you have already probably been trading options. So I'm not trying to preach something here, but this is probably the most common experience for options traders. If you know the market, if you know the options markets well, you'll realize that in the options world, it's difficult to keep a consistent performance because there are several things working against us. So, first of all, you've heard me speak about this before, probably. The market maker edge is pretty severe. So, this is different from the options market and the stock market. When you trade stocks, you're most of the time, unless you're trading in some very exotic stocks, most of the time in a stock trading platform, you're actually dealing with another trader, with another stock purchaser or seller. Whereas in the options market, that's not the case. We deal with the market maker at the other end, and the market maker has considerable flexibility in setting the bid ask prices, in setting option prices, in the way they calculate volatility. Of course, they can't do whatever they want, but they do have considerable flexibility there. And so it's difficult for us to get an edge. And if that wasn't enough, we all know how transaction costs are a big issue for us traders. And then we, of course, are also subject to trading errors. We make mistakes. Our emotions come in the way, and several things can go wrong. So when you add up all of this, including the market maker edge, it's very difficult to have a consistent performance in the options market. So and that's exactly what the income max strategies is all about. We when we enter the options market, we are at a disadvantage. The income max strategies are a system that will bring that edge back to our side. And why is that important? In my opinion, and again, I'm not trying to preach. Many of you have probably uh, you're probably advanced traders yourself, and you may have experienced this. I certainly have. Every time we pick a few strategies, we pick some stocks, we go fishing. We are in fishing mode. Okay, which stock should we trade today? Which strategy would be good? And we enter these trades, and the problem with that kind of an approach is it is not systematic. So what happens if it goes down? What happens if it goes up? What happens if it stays neutral? You don't have a ready-made system to deal with these events, and that is the problem. And that's where you make errors, your emotions come in, and all of that. So, in my opinion, the keys to success with options trading is you pick a few strategies. Something, some people like calendars, some people like iron condors, some people like credit spreads, whatever the case might be. You should pick a few strategies to master. And then what you need is not just the strategy, because the strategy alone is not enough. You have to build a system around it. And what does the system do? The system has to have the following components, and I'll get into that in the next slide. But it's very important to have a consistent and repeatable system, so that you operate almost mechanically like a robot. If it goes up, you know exactly what to do. If it goes down, you know exactly what to do. And this is what I mean by a mechanical system, where you clearly understand, where you clearly know what your options are, and you clearly know what you're going to do if something happens. So in the income max strategies, it uses the simple base strategies. Okay, so in the spread system, we use both debit spreads and credit spreads. And in the straddle system, we use both straddles and strangles. Now, these are the simple base strategies. There's no edge in these strategies. In fact, the edge in these strategies is actually on the side of the market maker. So that's why you can put all these strategies all you want, but over the long run, statistically speaking, the market maker will always come up ahead because there's no edge in these strategies on our side. In fact, the edge is on the other side. So, how do we build something where we can bring the edge back to our side? And that's how you create a system around it. So if you want to take debit spreads and credit spreads, for example, first of all, it needs to have two components. The first component is going to be your income generation component, because obviously you're putting these strategies to create some sort of an income, whether it's a weekly income or a monthly income or a 2 monthly income. It doesn't matter. You want to make money from it. And the second aspect of the system around it is risk management, because risk management is the key in options trading. If you can control your losses, the winners will automatically come. So that's how you build the system around the core strategies. And in this case, in the IncomeMAX strategies, for both the spread system as well as the straddle system, we have 2 to 3 adjustment tactics for each of them, and we have some income generation tactics for them. So combined, the income generation tactics and the adjustment tactics form the system. So the advantage of deploying a system like this is you know exactly what to do, whether the market goes up, whether the market goes down, or whether the stock goes down, whether it stays flat. It doesn't matter. You know exactly what to do. And this, in my mind, or in my opinion rather, is the key to success with options. So that's exactly what the IncomeMAX strategies are all about. And of course, it's gone through testing, it's gone through various iterations. So what you're getting is an intellectual property that has been well designed, and it's been well tested, and all of that. So let's first talk about the IncomeMAX spread system. So the IncomeMAX spread system is very flexible. It's going to work on many instruments. It can work on big stocks, it can work on small stocks, it can also work on ETFs as well as the indices. The IncomeMAX spread system is actually ideal to build small accounts quickly. So what do we mean by small accounts? I'm talking of anything less than $25,000 is generally considered a small account. Anything above 25 to perhaps 50 or 100 is a medium, and anything over 75 to 100 is is a large account. Now, obviously, all of these strategies are going to work for large accounts. There's no question. Any strategy will work for large accounts. But the beauty of the IncomeMAX strategies is that it is ideal for small accounts, because the way the strategies are constructed, your performance is going to compound. So what I mean by that is, I'm going to explain that later when I show you what's going on with the IncomeMAX trades. But you're going to be able to compound your performance even within a month itself. You're going to have some compounding effects in these strategies. So, and in the IncomeMAX spread system, there is, the beauty is there is a version for even small, very small accounts like $5,000. You can start to build these accounts in a managed way, in a risk controlled way, and in a fairly quick aggressive returns, 5 to 10% each month. So that's pretty good for the small accounts, because the small accounts, you really need to build those accounts a little bigger as quickly as you can. That's really the need for the small accounts. And similarly, the IncomeMAX straddle system will work for ETFs. It'll work for things like the Spider, the Gold, and all of that. And it'll work well for smaller stocks. Now, for larger stocks like Google or Apple, any of these huge stocks, as you can imagine, if you were to put a straddle on Google, we are buying two at the money options, so it can get expensive. Of course, you can reduce the size of your contracts and things like that, but the straddle system is more suitable for stocks that are less than $150, but it's very powerful. Even in the straddle system, your performance is going to compound, and you're going to be able to make quick hits that will grow your account. So both of these strategies have a lot of similarities to them, and they both have the same characteristic. That is, it's ideal for small to build up small accounts, and the performance is going to compound in some in some manner. So now let's just talk about what you can expect from a single trade when we do either the income max spreads or the straddle system. So generally, each trade is going to have about what I call 3 or 4 legs. And now, don't confuse what I mean by legs here with legs of a spread. That's not what I mean. The trade itself is going to progress. You'll have one leg this week, maybe another leg next week. Even though the overall trade is the same, you're still going to have some legs to it. And the key to the income max strategies is that you have to apply the risk management tactics very methodically. And so, this is the big part of both these strategies is, as I mentioned, there are two things: the income generation part and the risk management part. So the key is to apply the risk management very methodically. Both these strategies have built-in risk containment systems. So that is very important for me, because I don't know how much you know about my other strategies as well. The option edge, which used to be called the holy grail, it's a very powerful, it's a very sophisticated piece of intellectual property. And risk management is key in all of that, because if you don't, if any system you have, if you don't have risk management, a very strong base of risk management, then the system will fail at some point. And so, the as I design my strategies, the risk management is always very, very important. So now, the if you see on this slide, what I say is, when people trade options, the big mistake, in my opinion, that they make is that they don't approach it in a systematic manner. So, in my opinion, if you had an ideal portfolio allocation strategy for your options, just your options account, what I would do is, allocate about 80% of that to systems that are built to give you an edge. And then the balance 20%, you can take some of these more speculative kind of trades. I have my own trading ideas service. You'll have trade alerts from 1,000 other companies. And but you have to understand, this is, it's always going to be a hit or miss game, because that's exactly the nature of that beast. You can try a calendar today, you can try a credit spread tomorrow, you can try a butterfly on a different stock the third day. All you're doing is fishing, and there's nothing wrong with fishing. I just think most people make the mistake of allocating 80 or 90% of their portfolio to fishing trades, whereas in fact it should actually be the opposite. You allocate 10 to 20% of your portfolio to fishing, because sometimes when you fish, you can get very big hits, but you'll also see some losses. That's just part of the game. But allocate a small part of that, and then what you really need to do with options is pick strategies that are designed to give the trader the edge and not the market maker. Because in the long run, if you simply play by the market maker rules, you're going to lose. Statistically, their business models are bulletproof. The way they structure the rules in terms of the bid ask prices, as well as setting option prices, you're definitely going to be at a disadvantage on every single trade that you put. So, anytime you enter the options market, I always compare this to entering the casinos, because it is very true. When you go into the casino, you're playing against the casino. When you enter the options market, you're playing against the market maker. These people would not be in this business if they did not have a statistical edge in the long run. You have to understand that. So their business models are bulletproof. And so for us to get an edge, you need to have strategies and systems that will give you an edge. And that's exactly what I mean by portfolio allocation. So devote most of your money, most of your capital to strategies that have this edge. Obviously, I have my own strategies. There are other strategies in the market. Perhaps you have thought of a complete strategy or a system yourself. Whatever it is, just don't blindly just go and do a trade, because you in the long run, it is not going to work for you. You have to have a statistical edge. You have to bring that edge back to your side. Okay, so let's talk about the IncomeMAX performance. These strategies were launched on November 1. We entered our first trade on November 6. Now, the power of this strategy is that you can see some immediate fantastic returns. Now, not every trade is going to progress like this, but what ended up happening on this particular trade on November 7th, on day one, we booked 30%. And people booked absolute profits of between 400 to 1800 in one day. So basically what I'm saying is most people recovered the cost of these strategies in one day itself. So let me just show you. These are the emails, and you've probably seen the IncomeMAX Strategies page on my website, and you may have seen some of these testimonials. Here's Claude. He made 1485 in one day. This is on November 7th. We launched the trade on November 6th, and on November 7th, here's 1485. And here you go. Here's Jonathan says, I also took the 30% profit in just one day, and thanks to your IncomeMAX strategy. And here's a smaller account, took about 400 on that trade. Here's 570, made 750. So you're going to see this kind of thing. Obviously this is a very good performance, and timing is also important. And I'm not saying every day you're going to make this, but the power of these strategies is that you give yourself an edge. You're going to put yourself in a much, much higher probability of success on every trade. So that's basically what I have. I'm happy to take questions. I'm pretty sure many people have questions. You can always email me at info@optiontiger.com. You can also call me on my number. I'm based in the Washington, D.C. area, East Coast time. My number is 301-760-7658. If you want to speak on the phone, I would highly recommend you just send me an email and let's schedule a time.